We've been watching a big developing story in the oil market today. So, too, is Mark Fisher. He joins us now on the CNBC Newsline, certainly one of the most astute energy traders ever. So through the trader's eyes here, Mark, and a good one at that, what are your thoughts as you watch what's unfolding there?
Well, Scott, there's too much, uncertainty, obviously. There's too much asymmetry up or down to really do anything. I mean, everyone's antenna was raised about a couple weeks ago when OPEC said they're going to raise production over the weekend, a couple weekends ago, and the price, instead of responding, which normally would do, would go down, which would be additional supply, actually opened up higher and it's gone up straight up since then. So obviously the market knew something that most people didn't know, because obviously that bad news could actually happen. But again, there's too many wild cards. What happens here now with the attack now in Iran on Israel's civilian populations. And now I'm sure there's going to be another response. It's going to be even more drastic than the first response. And you have, what happens in the Strait of Hormuz. Does Israel go after not just the nukes, but now after just the oil refineries? It's too many variables to really know from where we're going. I mean, obviously, if this was 2-3 years ago, the price would have been $100-something. But now with all the excess production that we have from Saudi Arabia on the market, it seems that it's just one. This is, trading right now is a very, very, tough call and very, very risky call. And my heart goes out to everyone, in Israel, because this is obviously, not what anybody wanted, but I guess what had to have happened. And so now where we are is that as a trader, it depends, the easiest trade in all these things is always to be long, heating oil cracks, which obviously rallied tremendously today in gas oil, And again, the safest part of the thing would be basically long, the refinery spreads. Where we go from here, my mind is really preoccupied with the people in Israel, and I'm really concerned about what goes on there. But it's a very, very tricky and, there's too many wild cards here to really say what can happen from here. And I don't want to go ahead and put myself in a loop.
I understand. When you hear the Israeli defense minister say that Iran crossed a red line by going after civilian areas, does that only ramp up your expectation that oil has the risk of moving higher, because it just further raises the stakes of an even larger escalation now and a response to that by Israel?
Well, that's absolutely going to happen. The question is, this is not three-dimensional chess. This is eight-dimensional chess. I mean, obviously, Israel's response is going to be, even more catastrophic for Iran. And where we go from here in terms of what's Iran's next move? Do they go ahead and do something in the Strait of Hormuz? Do they do something against U.S. military assets, whether it be in Iraq or in Israel or anywhere in the Middle East? Does the Houthis, respond in some crazy way? I mean, there's too many variables here, and obviously, my mind's not really thinking properly, because obviously this is a very sensitive subject for me. But if I'm looking at this, trying to be objective, the risk reward here is refinery spreads, because that's the most straightforward, most liquid way that, in terms of, where we are to what we could be. Because I'll tell you one thing, though, I really think that, and I'm not a stock guy, and that, and I never professed to be a stock guy. But if I was a stock guy and there was a way to buy, the Iranian stock market over the next week, I would do it, because it can't get much worse. And if this situation ends the way I think it's going to end, I think the Middle East is going to be a lot better off. And the time to buy something is when it can't get much worse, and that's probably what's going to happen in Iran.